Hello traders, and welcome back to the GFT YouTube channel. In this video today, I'm going to be breaking down a recent Euro US dollar short which I executed on my GFT 100k funded account. In this video, you're going to learn how I approach the markets on a daily basis and how I identify high probability trade setups on a daily basis. So make sure you grab a pen and paper and start taking notes, as I'm going to aim to provide as much value as possible in this video so you can then implement it into your trading and begin getting results. So as you can see, I am now on the Euro US dollar chart, and the exact date that I actually executed this trade setup on was Tuesday the 19th of August 2025. So if you do want to come onto your own charts to actually study this specific trade setup so you can help implement the knowledge you do learn from this video, then I would recommend doing so. Now I will do my best to actually keep this breakdown as simple as possible, as I am very aware that there will be a variety of traders watching this video who are all at different levels in their journey. Now, as I mentioned before, I use the power of multi-time frame analysis, as I understand the fractal nature of the markets, and I understand that each one of my time frames is help telling me a story to actually build my overall trade idea. So I start off on the higher time frames. Now, obviously, I don't use every single time frame that is. I use specific time frames which suit me. So my main higher time frames are actually the daily and the 4 hour. But in some cases, I will actually have to go up to the monthly, for example, like in this case, to have just to take a closer look at what price is currently reacting with. So I can now see, look, now since going to the monthly, why Euro US dollar is actually currently reacting in a bearish manner, and it's because it has literally recently mitigated a monthly supply zone. So we can clearly see, look, we had an impulsive move onto the downside here, and price has slowly returned back to this supply zone where that supply was initially injected into the market from, and we are now getting a reaction to this zone again, as of course we have cleared a lot of liquidity going into this zone. And on the monthly, what we can just see overall is that the order flow is currently bearish on that monthly time frame. So we have actually reacted with a monthly supply zone, which actually will indicate that there could be potential shorts available, as our higher time frame levels of supply and demand, or our higher time frame levels of imbalances, are much more stronger in comparison to our lower time frame. So we can actually expect a much more significant reaction to these levels. So going back to the daily now, I can now see that price has recently reacted with this monthly supply, which has actually caused sellers to step into the market from here, and it has actually caused our daily to shift from bullish to bearish, as you could see, the daily was making higher highs, higher lows, higher highs, higher lows, higher highs, until we finally mitigate into this monthly supply, and then we see supply begin to actually be injected into the market. So we can see we get an impulsive move onto the downside once we react to that monthly zone. That then brings us into daily demand. We then react to our daily demand. That then causes a bullish reaction, but this brings us back into daily supply now, which was created from the reaction to that monthly supply zone. And what we can see is supply is respected, which creates an impulsive move onto the downside, which causes price to actually take out this daily low, giving us an order flow shift and giving us a demand failure, which is indicated now that supply is in control of this market on the higher time frame. And we can clearly see now that we are in premium pricing on the higher time frame. So therefore, we would basically therefore we would mainly be interested in shorts, as we understand that our banks and our institutions, our large hedge funds in the market, the big players in the market, are all selling from premium pricing and they're all buying from discount pricing. So we like to follow that framework. So the highest probability shorts will derive from premium pricing, and the highest probability buys will derive from discount pricing. So now I can actually draw in my trading range on this daily time frame, which is from this high to this recent low, and then this will actually identify my overall optimal trade entry within this trading range, which is at the 705 and 0.79% of this Fibonacci retracement. And what we can see is price plotted in this lower low, and then what we see is price has impulsively kind of correctively then moved back onto the upside into supply. And what price is basically doing here is trying to actually take out a high up here, but as we can see, it fails to do so, as we are actually brought into supply, and then we actually start to see sellers step into the market again. And we can clearly see that, yes, well, on the previous trading day on Monday the 18th of August, we actually got quite a strong impulsive bearish daily candle closure. So we could then maybe anticipate that this next candlestick could be printing another bearish candle. And we could also actually build upon the theory that this could now be, theoretically speaking, a weak low, as it failed to take out any high above. And then what we can clearly see is that the supply chain is starting to be built, and that we can clearly see supply is starting to take control of this market since mitigating this monthly supply zone. So because of this data that we have gathered so far on this higher time frame, we are mainly interested in shorts at the moment, but we actually don't have any confirmation of a short trade entry. So this is why we actually have to go onto our lower time frame to build upon this idea and get further confirmation of this short bias before actually considering an entry. Because right now it is completely just speculation. We have no confirmation that this is actually going to go short. So this is why we then work onto our lower time frames to help actually get more confirmation to this overall trade idea. So I've now moved a time frame lower. So I've gone from the daily to the 4 hour, and basically the 4 hour and the daily are pretty similar. But what I can see is a bit more detail on the 4 hour in between fluctuations from. So I've now gone down a time frame, so from the daily to the 4 hour. And the 4 hour and the daily are more or less the same. It's just the 4 hour gives you a bit more of a detailed view of what's actually happened. So on the 4 hour, I can clearly see this overall order flow shift a lot more clearer. And I can clearly see that we got a nice candle closure below this. And I can clearly see that our order flow shifted from bullish to bearish here, which actually helps confirm our short idea even further, as obviously we would like to see our higher time frame order flow shift bearish before considering shorts, and it has done so. And then we can clearly see that price has slowly, correctively returned back into this daily supply, engineering liquidity for price to move back onto the downside. So as we can see, look, we've built some trend line liquidity on the way back into this supply zone, which we could basically clearly see price potentially tap this supply and then start to run all of this trend line / mitigation liquidity. So the 4 hour isn't actually displaying too much, so we're not actually going to do too much analysis on this chart, as the daily has done enough for us on the higher time frame so far. But what I can actually mark up here quickly is a bearish fair value gap, which price is currently residing in on the 4 hour. So price is currently in a daily supply zone and an actual inefficient bearish price zone also. So this could actually indicate that sells may be actually executed from this level by larger players. So now we have gathered this data on the daily / 4 hour, we can move even lower. So I'm going to go into my 1 hour time frame just to get a closer look at the price action and just to see where we are currently positioned on the hourly time frame. And what you can see now is you can start to see the indicators that I actually use. So you can see these dashed lines, and this basically just separates the days, and it just basically helps me identify my previous daily lows and my previous daily highs a lot more easier, as I do tend to use these levels a lot. But in this actual specific video, we're not going to be talking about that. We're just going to be trying to keep it simple and breaking down the overall multi-time frame analysis so you can actually start using this to your advantage yourself. And yeah, so on the hourly, what we can clearly see is that price has recently retraced back into the supply chain. And what we can clearly see is that we actually are residing in an hourly fair value gap. And what we can also see is that we have actually ran some buy stop liquidity in the process of mitigating this fair value gap, which could actually give enough fuel for price to now distribute onto the downside, as obviously when we fill in an efficient price zone, we are collecting liquidity which was skipped. So liquidity is being liquidity is being collected at this fair value gap. And we can also see we've ran some buy stop liquidity in the process, which could actually fuel a distribution onto the downside and actually fuel the downside move, which we are actually anticipating. So this is actually building further confluence to this overall short idea, because I can clearly see that price has retraced into a bearish fair value gap on the hourly. It has ran some buy stop liquidity in the process. And then also what I can see now is that we have actually run the Asia range session highs, which is a key level of time-based liquidity. As during the Asia session, we tend to actually get an accumulation of price, and then basically London or New York will tend to use that accumulation as liquidity. So we'll either target Asia lows or target Asia highs. But this is Wyckoff methodology, and we will be going further into this in detail in future videos. But like I said, in this video, I'm trying to keep this as simple as possible. But I will briefly touch upon it when it's relevant to do so. But yeah, on a classical buy day, so when I am looking at a bullish market and everything aligns for longs, then I will be interested in a classical buy day presenting during either the London session or during the New York session. And a classical buy day is when I would see Asia lows swept, the mitigation of some sort of demand, and then I would then see a lower time frame order flow shift, and I would jump in on that. And then it's the same for when I'm looking at a bearish market and looking at shorts. When I am actually anticipating shorts for the day, I would ideally like to see a classical sell day present itself during either the London session or during the New York session. And a classical sell day is when we see Asia range highs, so we see that buy stop liquidity being ran, and then we see the mitigation of a supply zone, and then we see our lower time frame order flow shift from there, and then we jump in from there. So it's not actual rocket science. It can sound quite complicated to a beginner, but genuinely it's just a series of patterns which you are programming into your mind to see every day. So what we can clearly see is, obviously, we are mostly interested in shorts. We are looking at a bearish market, so therefore ideally we would like to see a classical sell day present itself during London. So what I'm going to do is actually map up my Asia range highs and my Asia range lows, and this indicator does it for me automatically, and then I just literally mark it myself, because as you can see, we have this gray highlight over price, and this is basically just an indicator which basically highlights the Asia session range. So it marks the highs and lows for me, so I can actually identify them easily in the morning, ready to actually look for trade ideas. So like I said, we were looking for a classical sell day to present, and what we can see here is that on Tuesday we actually seen Asia range highs swept first. So we've seen the buy stop liquidity swept first. We then mitigated a bearish fair value gap, and also we actually swept some further buy stop liquidity in the process, and we actually have Asia session lows left open, which could be now acting as a drawing liquidity onto the downside. So we now actually have a clear target for these shorts. So now you can see that this short idea is starting to build, because we already have a target in mind. And we actually now have a level which we could potentially anticipate price to go short from, which is this bearish fair value gap. And this is due to liquidity reasons. We've filled we've filled a fair value gap, which is an inefficient price zone. We've made it efficient again, we've collected liquidity in the process. We swept a ton of buy stop liquidity in the process. And then what we can also see as well, touching on the institutional footprint bit, is we can clearly see we have a large footprint onto the downside from here made on the hourly. So we can clearly see as well this aligns with the current supply chain, because as you can see, if I start marking up the supply chain, the mitigation process, we can see this supply is being used. So we're not interested in this supply anymore, as it has already been used and the orders have been moved. We can see this supply is being used. As you can see, we get a move onto the downside, we tap into supply here, and then move again back onto the downside. And then we actually leave open this fair value gap. So we actually have no reason for price to come any higher. So this is why this fair value gap is actually quite a good logical place for us to expect these shorts to derive from. And also we can see the Asia highs have been swept in the process. And we're using the power of Wyckoff methodology on our lower time frame to actually execute these positions, because we use the power of three, which is accumulation, manipulation, and distribution. So the Asia session is the accumulation, and then the manipulation usually happens during the European session or during London, and then the distribution will usually happen during London or New York. Obviously, not every day this will happen, but when it does happen, we take advantage of this. So now we have gathered this data on the hourly, and we can clearly see that we have mitigated a hourly fair value gap, a bearish fair value gap. We've swept a ton of liquidity in the process. We can now potentially look at executing shorts on our lower time frame. But what we want to see is our lower time frame order flow shift from bullish to bearish, because obviously price on our lower time frames would be bullish going into this fair value gap. So therefore, we would like to see that lower time frame shift bearish, aligning with our higher time frame, which will then give us complete confirmation to start looking for these short entries as our time frames are aligned, making these shorts much more higher probability. Now we have gathered this data on our hourly time frame, and it still supports our overall short idea which we gathered on the higher time frame. We can now start moving on to our lower time frames and start considering an entry. But we're not going to enter anything yet until we get further confirmation. So from the hourly, I will then go into the 15-minute to get a closer look at the current price action which is being displayed in the market. So what I can see is during London, well, on this specific day, I sat out of London, and that's due to the fact of where price was positioned. Price hadn't yet filled the fair value gap in London. This was my main point of interest, which I was looking for price to hit before it would reverse onto the downside. So therefore, I wasn't interested in shorts from anywhere apart from this fair value gap. So what we can see is, look, on the left here, we have supply. And what we see is, look, Asia highs have been swept. We've then mitigated supply. This has then caused an influx of sellers into the market. They basically believe that because London has swept Asia highs, swept liquidity, they are now anticipating for price to just melt. And they are basically expecting that London volume to hit, because obviously London has the highest amount of volume being put into the market. London, generally speaking, has the highest amount of orders being executed into the market on a daily basis. This is why it is my favorite trade session, as I like to trade with volume. I don't like to trade in range in markets. I always like to trade in markets that are moving, and London tends to move price. But on some days, London can be low. So on some days, London can be slow. So therefore, I trade the New York session on them days. And that's due to the fact London can manipulate and just range and accumulate for New York. And this is what happened on this specific day. London literally was just driving price into this fair value gap, so then New York could make the short move for the day. And I was very much aware of that. I wasn't interested in getting into any trade positions during London due to the fact of where price was positioned. If price did actually sweep Asia highs and then actually filled this fair value gap during the London session, then I would potentially look at shorts during the London session. But because this didn't happen, I wasn't interested in any short entries until we actually filled this fair value gap, and that happened during the New York session. So on some days, you're going to have to be patient and you're going to have to sit on your hands. And that's one thing you need to develop. It's a very, very good skill to develop as a trader, to just literally sit on your hands and be patient and wait for the perfect time to strike. Because there's a lot of people just getting lured into trade positions because of their emotions. They basically get FOMO, they get fear of missing out. So they have an overall direction, they know where the market's moving on the higher time frame, but because they're so impatient when it comes to executing, they still don't make money off of their knowledge. So this is why it's so important to develop a very patient mindset, as a trader, as there's a very common quote which states that the money flows from the impatient trader to the patient trader. So always make sure you are being patient and you are not executing based off emotion and based off fear of missing out. Always make sure that you are following your plan, sticking to your rules, and executing off of that plan only, because then you can't beat yourself up if you do take a loss, as you stuck to your trading rules. So on the 15-minute, all I want to basically see here is that sellers start to commit to this market. And I can't really see much going off on the 15-minute here, so I would usually go on to the lower time frame here. But what I can see is that we do have this higher high which was formed. It was then swept, as you can see, and then we tap this fair value gap. So what I would basically like to see is sellers start to step into the market from this fair value gap, and I'd like to see this demand zone fail before considering my short entry. So what we can see, New York session hits. We are now in New York, and then price starts to move on to the downside as it reacts with this bearish fair value gap, and sellers clearly start to step into the market, and supply clearly starts to take control as we create supply here, look, and then price taps back into this supply and then moves on to the downside here. And we can see a lot of wicks, so we can see a lot of mitigations going on, but we can't see too much on this 15-minute time frame. So this is why I actually went onto my lower time frame to get a closer look at the price action, so I could then execute a nice position. But we have now got confirmation on the 15-minute of these short buyers, as we've seen an order flow shift, and we've seen our order flow shift from bullish to bearish as we've had a demand failure, and we can clearly see that supply has took control of the market from this fair value gap. So this supports our actual short idea even further, and now we are going to look for an entry on our entry time frames. Execution time frame, which is the 3-minute right now, but as I previously mentioned, I either use the 5-minute, 3-minute, or 2-minute to enter from. And it all depends on which one is giving me the most cleanest and efficient price action. And then obviously, whichever one is giving me the cleanest and most efficient price action, I will then use that for my execution time frame. And in this case, on this specific day with EU, the 3 minute was giving me the cleanest and most efficient price action since we mitigated my higher time frame point of interest, which was that hourly fair value gap. So basically what I do here on my lower time frame is zoom in and basically look for supply to take control away from this bearish fair value gap and basically look for an order flow realignment. So I basically want to see my order flow realign bearish with my higher time frame. And what we can see going into the fair value gap, we was bullish on the 3 minute. We made a higher high here. We then pulled back, made a higher low here. We then expand up, creating a higher high here. And as you can see, at this point in time, we are bullish. But then we see sellers step into the market from this fair value gap, and we see an impulsive move onto the downside, which was being made. And then that gives us a demand failure, as you can see. This was the demand which caused the recent expansion on the 3 minute to form the recent 3 minute higher high, making it quite a significant demand zone on that specific time frame. Now, as you can see, we are brought back into that demand. We then get a reaction to it, but then we flip it into a supply zone. So we can clearly see we actually have a demand to supply flip zone. So we can see that demand has clearly lost control of the market from this level, as we've had a demand to supply flip zone form, and that has ultimately led to the demand failing, which has then ultimately led to our order flow realigning bearish. So now we have full confirmation to now enter a short setup, as all of our time frames are telling us the same story. They're all telling us shorts and they're all suggesting shorts. So therefore, we are now ready to look for a trade entry, as we have stacked data on multiple time frames to build this overall short idea. And now our 3 minute, our lower time frame, is also aligning with this overall idea. We can now look for an entry, as obviously our highest probability entries come from when our lower time frames are aligned with our higher time frames. And if your lower time frame isn't aligned with your higher time frame, your lower time frame is basically telling you to wait for it to display bearish signs. So in this case, bearish signs before considering an entry. So as you can see, a really nice trade entry would have been from this demand to supply flip. It would have been more classed as a risk entry because you did get the order, although you got the order flow realignment, that's not full confirmation of the order flow shift. It's just an indication. Once we get a break of structure after that order flow realignment, that then confirms that the market is bearish on this 3 minute. So once we've seen this lower low being taken out, this confirmed that the 3 minute had fully shifted bearish for me, and that I can now take a very safe confirmation high probability trade setup. Now what I do is basically monitor the order flow. So I'm just basically tracking the mitigation process, and I'm keeping up with the overall orders which are being moved in the market. So what I can see, look, if I take a detailed view, is we mitigate into the demand to supply flip zone. We then get an impulsive move onto the downside from there, creating a supply zone here. We mitigate that supply here, which causes this move onto the downside. And then we create this supply here, and we use that again. As you can see, we tap back into the supply here. We use that so we can see the orders have been moved again from here. So now it is quite a tricky place to look for an entry, but all I did was map up the highs and the lows of this recent candlestick, which caused the recent impulsive move onto the downside, which actually took out this lower low here on the 3 minute, as you can see. And I'm just following that mitigation process. As you can see, look, we're following the overall supply chain, and this one has been left open and hasn't yet been used. And what makes this more favorable for me is the fact that we have some liquidity to run into this supply zone, making it more high probability for my trade idea, as basically we have an inducement which is formed before my entry point. And an inducement is basically liquidity which is being engineered before your entry, and then that liquidity will be used to actually distribute price in your favor. So now we target the other end of the Asia range liquidity, as once we take out Asia highs, Asia lows will then start acting as a magnet for price and will begin drawing price onto the downside. So we actually have a reason for price to move onto the downside here, as we have Asia lows left open. So that is our target. And my stop loss was actually, it was a bit more room. So I left it a bit more room, as I wasn't aware that potentially maybe price could take out this high, mitigate into this like order block here and continue down. So I was just trying to cover my back, and this turned it into like a 4.75 Well, I think the actual trade position was like 4.8, but yeah, there you go. It was 4.8, and this was my exact trade position here. This was my exact entry, my exact stop loss, and I just simply joined the lower time frame supply chain. As you can see, we just monitored the order flow and just patiently waited, and then scaled in once we had a nice high probability idea form. And as you can see, oh, maybe my entry wasn't right refined up to there, but I got tapped in around here, and then price started to distribute onto the downside. So it was quite choppy, but eventually price did hit TP. It is quite nice, efficient price action in my opinion on the lower time frame here. It presented many scaling opportunities in my opinion, and yet overall it was a lovely trade idea. And eventually Asia lows was hit, and our overall TP was smashed. Price did begin to accumulate as we came to the end of the day, as you can see. But I just kept my trade position running, and eventually Asia lows was ran, as you can see, and our full TP hit was on our position, get banking as 4.8R on the 100k GFT funded account. So yeah, it was a very nice trade setup to make $4,800 within a few hours. You know, it's really nice. And this is a very high probability trade setup because we've obviously gathered data from multiple time frames to build this overall setup, and then we got further confirmation of this idea on the lower time frame. Now there is more to it, but I couldn't go into all of it because we'd literally be sat here for an hour. I used the DXY because the DXY correlates with with EU, so I also used the DXY to help me with these trade setups. And there's a few other factors which I haven't managed to mention in this video. But like I said, stay tuned and subscribe to GFT's YouTube channel because I'm going to be uploading a lot more educational videos regarding my strategy, and there'll be a lot more trade breakdown videos on the way and much better ones on the way. But make sure you subscribe to the YouTube channel so you do not miss out on any of these future videos. Also, make sure to check out the description and follow all of our social medias so you can keep in the loop and do not miss out on any important announcements. So do also make sure you join our Discord community also, as we share a lot of information in the Discord with our community. So thank you for watching this video. I hope you have all took some value away from it, and I look forward to seeing you all in the next video.